Really cool news that just came out from one of our favorite stocks. We're going to talk about it, but we're going to give everybody a chance to get into the stream first. So we're going to talk about some other still interesting things, but not as interesting as this Mr. Beast news. All right, I think this is pretty cool stuff. And I will say nothing is confirmed 100% or anything like that, but we've got some pretty interesting stuff on the Mr. Beast front. So we're going to talk about that in probably 5 or so minutes. If you're watching the rerun, then you might want to skip to 5 minutes in because we're just going to cover some of the normal stuff going on in the market and give people a chance to get into the stream before we start talking about Mr. Beast, because I know a lot of people might be interested in this, and it's a pretty cool story if you ask me. So good morning, everyone. Good morning, Tyler, Rocky Mountain Gobblers, Matt, Shadow Girl, Mike Steele, and Squirrely B. Good morning, guys. Welcome to the stream. And it's looking like stocks are actually moving down a little bit this pre-market. If you look at the SPY, we are moving down ever since we got the consumer price, not the consumer price index, the retail sales numbers. So we are moving down, unfortunately. And at first, we were moving up on these numbers because at first glance, the numbers that we got actually seem pretty good, right? Retail sales surged 3.8% in January, much more than expected amid inflation rise. And so you're looking at this and you're thinking, well, retail sales are up, companies are doing well, they're selling a lot of goods. And we can actually look at how the numbers typically perform on this chart right here. And you can see 3.8%, that's above the 2% forecast. That's pretty good. We're actually doing significantly better than what we do most months. And you might be wondering, well, why are stocks falling while this is the case? And that is because the numbers are not adjusted for inflation. So we've seen a 7.5% rise in the consumer price index over the past year. And that is helping to raise the retail sales numbers because they're not adjusting for inflation. They're just tracking how many dollars people are spending. And if people are spending 7.5% more dollars on the goods that they buy, then of course we're going to see higher retail sales. So overall, not the best numbers. They could have been worse, though. They could have been below expectations. So I'm sure people are happy to see that they were at least in line or at least above expectations, right? We were expecting a 2% increase and we ended up getting a 3.8% increase. So all things considered, it could have been much worse than this. And stocks aren't really tanking on this news, right? We moved down a little bit. It looks like that descent is slowing down and not too much to worry about this morning in the market. Sure, we might open up a little bit redder than we were, but overall, I think it's a really good thing that we did break that big downwards trend that we were on yesterday on that Russia news, right? The news that Russia was withdrawing troops. Now we've got something to say about that also. Unfortunately, it looks like there are some questions about whether or not Russia is actually withdrawing troops, and that is also helping to instill some fear in the stock market, right? We're not so sure if Russia's actually withdrawing troops. We're going to look at that in just a little bit. But first, we will just go over very quickly this story. CNBC releases this kind of article every morning. 5 things to know before the stock market opens on Wednesday. Most of the time, it's not all that interesting. However, there was an interesting story that I saw in here. I do always take a peek at it. Well, first, we'll just take a peek at this. Biden says Russia invasion of Ukraine is still distinctly possible. Okay, well, we'll talk a little bit more about that later. The story that I really found interesting is that the Moderna CEO sees an 80% chance of COVID evolving as less virulent and becoming less contagious and less serious. So let's take a peek at the case counts. And I actually looked at these charts yesterday. And if you were at all worried about the economy, taking a hit because there were a bunch of cases going on and we were at record highs, well, if you look at this chart, you're not going to be very worried for too much longer because look at this. Look at this dramatic decrease that we've seen in cases over the past month. I mean, it looks like we had a massive spike right towards the beginning of January. A ton of people got it. It looks like over New Year's and pretty much as soon as 2022 started. And now we are back down to not, the lowest we've ever been, but fairly low case counts compared to what we were just at a month ago. So it looks like a lot of people got this thing. Maybe they got some immunity to it. Maybe this curve is going to really take a turn to the downside. And hopefully, if the Moderna CEO is correct, which the Moderna CEO says he sees an 80% chance of COVID evolving as less virulent, hopefully we could be done with this thing, right? Now, obviously, right, that leaves a 20% chance where we see a mutation which is more virulent than Omicron. So, there's side to each. There's two sides to this coin, but overall, the case counts moving down are looking like a very good thing for us, right? I'm very happy to see that we no longer are having record high cases day after day. We haven't looked at the data in a bit, but overall, I'm happy to see that these case counts are going down. Maybe we'll get some fewer restrictions. I know that I think it was maybe Denmark announced the end of the pandemic. They said that COVID was no longer a threat or no longer a serious threat, and they ended all their restrictions. Maybe we'll see something similar in the U.S. I know that would be probably a boost to business and might be what the Fed would be happy with. Not that the Fed gets to make that decision, but it might help the Fed out, right? So hopefully we'll see something along those lines happening. Now, we've also, speaking of the Fed, since we talked about them, we've also got the Federal Reserve meeting minutes coming out at 2 o'clock today. And these meeting minutes, I typically don't read them myself, but usually there are some pretty good summaries out there. We'll make sure to cover them at some point. But basically, these minutes are from a 2-week-old meeting that the Fed had where they talk about monetary policy, and it can be used to get an inkling for where the Fed might be headed with these rate hikes and their tightening decisions. So we're going to see what comes out at 2 o'clock today. And I will say, these meeting minutes can actually be pretty significant in the minds of many traders and investors. In fact, if you guys follow Meet Kevin, you'll know that Meet Kevin decided to sell all of his stocks because of the last release of the Fed meeting minutes. So overall, they can be pretty impactful. They can be pretty impactful. And we'll definitely be taking a look at that. Now, we've got this Mr. Beast story coming up. And I know I said we'd start talking about it at 5 minutes. Now it's 7 minutes into the stream. We'll start talking about it now, though. And it involves one of our favorite stocks. It's pretty cool what this story is all about. Obviously, you guys have probably heard of Mr. Beast, right here, 90.4 million subscribers. And you can subscribe for a cookie to his channel, apparently. I've not tried it yet. I don't subscribe to him. I've watched some of his videos. They are somewhat entertaining, I'll say. They might be a little bit more geared towards kids and whatnot, but overall, they're pretty entertaining. He's gotten some really big hits out there on YouTube. 219 million views on this Squid Game video. So pretty much everyone on YouTube knows who Mr. Beast is. And not just people on YouTube, but pretty much a lot of people in the world at least have heard of Mr. Beast, because if he's got 90 million subscribers, you've got to think about how many people have probably watched his videos at one point or another. So what we actually have in relation to this Mr. Beast news is something coming from the official Rumble Twitter account, okay? Rumble has this Twitter account. They don't have nearly as many followers as Mr. Beast does, but they just tweeted out something very interesting. They do have something that Mr. Beast wants. And if you look at it right here, they tweeted this out about 20 hours ago. They said, "All eyes on beast.com. At Mr. Beast, you're a top 5 creator on YouTube, right? We might have something for you. Let's chat." And if you actually go to beast.com, it takes you to Rumble. So it looks like they've somehow commandeered beast.com. Maybe they bought out the URL for it. Who knows how they got this, how long they've had it, how long they've been sitting on it. But they've got beast.com, it looks like. And it looks like they've relinked it or rerouted it to take you to Rumble. So Mr. Beast, if he happens to see this, maybe he wants beast.com. That would be a pretty good link for him to have. I think that currently what he has right now, if you go to one of his videos, we'll pull something up. Let's see. I think it's shop at Mr. Beast. I'm pretty sure. I don't even know if he has his website up. Look at this. His description doesn't even have a website. It has Feastables, which is a sponsor, and then it has Facebook, Twitter, Instagram, and MrBeastJobs.com. So he has MrBeastJobs.com, but he doesn't have Beast.com. So maybe he's going to want Beast.com from Rumble, and potentially, I'm sure they'd make a deal with him. Hey, we'll give you Beast.com if you just move, or if you start posting to Rumble as well. I'm sure that would be a great deal for them, great deal for him. And the last time that Rumble almost got a significant content creator on it, Joe Rogan, and not calling anyone else insignificant. Obviously, they've got me on there. But the last time that they almost got a real whale in terms of content creation, someone with an absolutely massive audience, it was Joe Rogan. And their stock did pump up quite a bit. In fact, from where it was the day before, where it opened up the day before, to the day that it pumped up at the highs, it was up 52%. And, Joe Rogan has a massive audience, but is Mr. Beast's audience bigger? I really don't know if Mr. Beast has a bigger audience than Joe Rogan. I know that the Joe Rogan Experience on YouTube only had about maybe 10 million subscribers or something along those lines, but Mr. Beast has 90 million subscribers. So, obviously Joe Rogan's thing is a podcast. He has viewers from other places, but Mr. Beast, I will say, is probably one of the biggest people on the internet. So if they were able to get him, then it could bump up Rumble stock quite a bit. Now, it's not a guarantee. You have to keep in mind a lot of his audience is younger, right? A lot of the audience is probably under the age of 18. They might not be of investing age, and their parents, well, yeah, sure, maybe they'll buy them a Mr. Beast t-shirt, might not be wanting to buy Mr. Beast stock just because their kids are saying, that they're posting to a new site or whatever it is. So, some people will surely buy the stock because they hear Mr. Beast is moving on to it and he's a really significant content creator. And we'll see what happens with it. It's not a guarantee that he's going to move over there, but Rumble does kind of have an interesting lure, I will say. Having the URL beast.com, having the domain, that's pretty cool. That's pretty cool, and I think Mr. Beast would like that. And to be fair to Rumble, it does not really cost anything at all to go on Rumble and post your videos there as well. So it's really an easy thing to do. And, I started doing it a long time ago. I don't think Mr. Beast would mind posting it there that much. Now, if YouTube had an issue with it, if he has some kind of contract with them, who knows? Probably not, but YouTube might not be as kind to him algorithmically if he started posting to Rumble as well. Who knows? So maybe he doesn't want to take the risk. You never know what's going on behind the scenes, but it is a very interesting potential situation. I mean, you see what happened last time when there was the Joe Rogan hype. Rumble, or Cfvi, I should say, completely outshined what it had done the past month. Right around here is where the whole Joe Rogan situation was arising, and where Rumble made that offer to have Joe Rogan on the site and to make them his exclusive provider of podcasts. That certainly drove up Rumble interest, or at least Cfvi interest, as well as the price of Cfvi. And we'll see what happens with this Mr. Beast situation. We'll see. Hopefully it's going to be a good situation for Rumble, but this only happened 20 hours ago. We don't know what's going on yet, but it's something to keep an eye on. Now, what we have to talk about regarding Russia, unfortunately, we had really good news. We'll pull up the SPY now. We had really seemingly great news yesterday in the pre-market. We moved up quite a bit on the SPY on news that Russia was pulling their troops away from the border. And people were very excited to hear that. They were thinking this is the end to this whole conflict. And it had been weighing on people's minds. In fact, if you look at the past 30 days, these past couple of days right here mostly, a lot of those falls were due to Russia-Ukraine tensions. Now, obviously, some moves in the market are just moves in the market, but a lot of this was based around Russia-Ukraine tensions. The White House was saying that we would likely see an invasion in the next couple of days, and they're still saying that an invasion is a possibility. Now, what's changed since then is yesterday, Russia said that they were moving their troops out. However, what we'll pull up now, NATO says Russia is increasing troop numbers at Ukrainian border and calls for talks. And this was published just a couple of hours ago. So as of a couple of hours ago, NATO thinks that Russia is actually increasing its troop numbers at the Ukrainian border. So right here, NATO has accused Russia of increasing its troop count at the Ukrainian border a day after Moscow claimed it had begun withdrawing some of its military units. So who's to be believed here? Well, Western leaders have warned that they are yet to see evidence of such a move, meaning that they've yet to see Russian troops move away from the border, after a spokesman for the Russian Ministry of Defense announced on Tuesday that some units, having completed their military drills near the border, were already on the move back to their permanent bases. So the Russian government released video footage on Wednesday, which it claimed showed military units returning to their permanent deployments after completing exercises. And it's noted that CNBC has not been able to verify the authenticity of the footage. Maybe it just showed, a 10-minute clip of, some of the troops walking onto a train, and then they turned off the cameras and then they walked back off. Who knows what it was showing, but we could probably watch the video right here. Maybe we will. We'll see. All right, some weird Russian website. I don't know if we even want to watch this. I don't know what's going to pop up here. This is sketchy, so we're not going to look at that. But basically, people are still a little bit worried about this Russia situation, and that's another potential reason for a little bit of the decrease that we're seeing in stocks this morning. In fact, you look at this, and it was around 4 that we were moving up, but then this news came out around 4, and we started moving down on the SPY. So, unfortunately, we're down a bit. We're down since this news came out from where we were at the highs. We're down about 0.85%. So it's not like we're crashing. It's not the biggest move to the downside, but it is a worry on people's minds, right? They're worried that Russia might not be done with this whole situation, that there might still be some volatility. I'm sure the VIX is moving up. Yeah, the VIX is moving up. Ever since 4, when this news came out, the VIX is up quite a bit. In fact, the VIX is the market volatility index. It tracks the options premiums and how expensive they get based on how fearful people are and how much people are willing to pay for them. And it is actually up 8.5%. So there is a little bit more volatility in the market ever since this news came out. People are a little bit more worried about what's going on with the Russia-Ukraine situation. And to be fair, it's not the best situation. It's not just stocks that are moving down either. It's cryptos as well. Bitcoin is down 1.4%. Ethereum is down 1.4%. Pretty much everything is down 1.4%. BNB is. A lot of these coins are moving down. Cryptos were actually seeing a bit of a rebound when fears were quelled, along with the stock market. So it looks like they are really tying themselves to the stock market in this situation. They're not becoming an alternative asset that's moving in a different direction from the stock market. People aren't putting money in them when there is fear. They're taking money out of them when there's fear. They're wanting to hold cash, it looks like, when there's significant fear out there. And the price of gold actually is starting to reflect maybe a little bit of reality. It's actually starting to move up, not too significantly, but it's starting to move up when people are a little bit more fearful. So overall, maybe that makes a little bit more sense than people holding cash, though. If we look at the dollar, yeah, you can see the dollar's actually starting to fall around when we got this news as well. So that's interesting stuff. Dollar's starting to fall, and then, of course, when the producer price, or not the producer price index, but the retail sales numbers came out, we got a little boost to the dollar. So all things considered, not the best situation, what we've got going on in Russia. It is something to continue thinking about, but it's the kind of thing where I look at it and I do not want to sell my stocks or my crypto because of a potential war with Russia, because I'm pretty sure a potential war with Russia, if we were really serious about this thing, if Russia and NATO and the U.S. and likely China, because Russia and China have been in talks recently, and China has backed Russia a little bit, if a war between all of those people broke out, or all of those countries broke out, it would not be good for the world overall. I mean, pretty much everyone involved in that has nuclear weapons, and it could be a world-ending situation, in which case it doesn't matter if you've sold your stocks or not. So I'd rather just hold them and assume that that's not going to happen, and let the stocks rise once all of this fear is dispelled, because, at the end of the day, it's an unlikely situation to occur. I don't think that any of the world leaders want that to happen. I don't think that anyone actually wants to go to war. I don't even think that Putin really wants to go to war, because he understands that not only does he have nuclear weapons, so does the U.S., so do some countries in NATO, so does China. It could get really ugly really fast, and there's no reason to start a hot war with anybody when times are seemingly pretty good, at least, for Putin, right? He's living probably a pretty fancy life wherever he's hanging out at his castle or his mansion, and why end that? I don't think that anyone really wants the world to be very disrupted, right? He would lose all of that mrbeast content. mrbeast wouldn't be making videos in a nuclear apocalypse, and then Putin couldn't watch those. So I don't think anyone really wants the world to end. I don't think any of the world leaders are looking to start a huge war. I think this is more so a posturing thing. He's going to take whatever he can get. The U.S. is going to take whatever they can get, and everyone's just trying to scare one another. I don't think that anyone's really going towards an actual war, but keep in mind, I could be wrong. Maybe we'll start a hot war. Maybe a hot war will begin over this Ukraine dispute, and that would be probably devastating for the stock market. But it's not where I'm putting my eggs. I'm not putting my eggs in that basket. I'm going to keep them in the overall market, right? I think that the overall market's going to do pretty well. I think if you've got a well-diversified portfolio, you're looking at a really green year for 2022. It's not been the best start, I will say. We have moved down significantly over the first part of 2022. But that means, if you didn't have your money in then and you were to buy in now, you'd potentially have higher gains. So that's just my opinion, not financial advice, but I am pretty bullish on the market for 2022. I think that we've been beaten down way too far over the past year, and you wouldn't know it from looking at the S&P. We've already talked about this a lot on the channel. The Russell shows it a little bit more. If you look at the past 365 days, how far we are from where we were back then, we're actually, the Russell's was right around there, and now we're down about 10% over the past year. So we've not had a good year for these small cap stocks. I think that we're finally starting to see the beginnings of a rebound. Now, the Russell's has actually been rebounding more than the S&P, which is exactly what we want to see. From the lows to the highs, the Russell's is up about 10%, and from the lows to the highs, the SPY is up, let's see how much they're up, about 6%. So we are seeing an outsized move in these small to mid-cap market, small to mid-sized market cap stocks, and I think that's indicating that we may have hit a bottom with these smaller stocks. It's been a long time since we've seen these smaller market cap stocks outperforming the big tech giants. A lot of the time, we'll pull up the market map for this, even though it's probably not active. But a lot of the time, on this market map, we've got these big stocks like Apple, Microsoft, Nvidia, Google, Facebook, Amazon, Tesla, all moving up in significant ways, and the smaller market cap stocks, although it's not really fair to call any of the stocks on this chart small market cap, they're all fairly significant, but the smaller stocks that aren't even showing up on this chart, a lot of the times they would be red, and you can see those stocks. Look at Sundial, and I know Sundial, it's a cannabis stock, so it's not the best representation of the overall smaller market cap stocks. It kind of trades in its own way, but it's been down dramatically. Stocks like Smile Direct Club, that's not a weird company at all. That's just a company that sells teeth straightening product. Down dramatically, down from highs of $13 a year ago, and it's currently trading at $241. So a lot of these smaller stocks have been decimated. They've been beaten down, pushed down, and I think that we are due for at least, if not to make new highs on some of these stocks, at least a big rebound and getting close to at least the midpoint on where they were. I mean, if you look at the midpoint on this chart, it's actually probably around $6, somewhere around there, $5 or $6, or maybe even $7 if you the midpoint between 13 and 2. Yeah, probably around $7 right there. So all in all, I think these stocks have a ways to go. I think they've been beaten down a little bit too far. Shorts have been a little bit too heavy-handed, I think, just pushing these stocks down and just shorting them when it doesn't necessarily make sense. Now, a lot of people were worried about inflation. They're worried about the Fed raising rates. And to be fair, there is a significant amount of inflation out there. We're looking at the inflation numbers. They're at 7.5%. We are seeing a lot of inflation. It's been moving up somewhat consistently. But in my opinion, that does not mean that you want to flee into cash, which is what a lot of people have been doing, right? They're worried about the Fed raising rates and not raising them too significantly. A lot of people are thinking that the Fed might raise rates by 0.5% in March. They might raise them to maybe 1 or 2% by the end of the year. Those are not high interest rates. We can look at interest rates over time. So here we go. Here is the interest rates that we've got, the federal funds effective rate over time. And, people are worried that we're going to nowadays raise them to, maybe by the end of the year, they'd be around here on the chart, which if you actually zoom out to the past, 50-ish years or so, that is pretty much nothing compared to where we were in the 1950s, the 60s, the 70s, the 80s. And even the early 2000s, we were much higher than that, right? We were at 5%. At times, we were as low as 1%. But it's crazy to see just how low we've gotten and just how fearful people are of interest rates going up a little bit. And to be fair, there's a lot of debt out there. There's some debt out in the world right now. The federal government, the national debt, rather, is $30 trillion. In fact, we haven't looked at the national debt in a little bit. So we'll pull up this national debt clock and see how much it's risen. It was just at 30 trillion a little bit ago. Now it's at 30 trillion, 35 billion. So it did not take them long to spend that 35 billion. It's only been a couple of days since we hit that $30 trillion number. So pretty significant increases in debt that we've seen over the past couple of years as well. I'll grant you that. But overall, I don't think that a 1 or 2% increase in rates is going to crash the market. I think that, maybe we could see it slow down a little bit, but I think we've already seen that happen. We've already seen stocks make the move that they're going to make because everyone knows that the Fed is going to be raising rates to some extent. So we've already seen stocks move down because of it. People have already priced that in my opinion. I think that now people might want to start realizing, or some people might start realizing, that cash is not this safe haven. Even if interest rates do go up by 1 or 2 or 3%, you still have to take into account the inflation rates, which are 7.5%. So you have to understand that if you have money in a bank account, right, and you're getting even a 3% interest rate on that money, if you had it in the bank account over the past year, you'd actually have less purchasing power than you did the year prior because the inflation rate is higher than the interest rate. So, best believe in all karma. Rob, you're definitely half robot. Information overload. I know I am talking a little quickly. Yeah, I do talk a little bit quickly, but that is hopefully appreciated by some people. And I remember when I first started watching stock videos on YouTube. There was a guy, Ricky Gutierrez, and I watched some of his videos, and he's gotten better now, but he definitely used to talk. I'm sure he was on Adderall or something, because it was almost incomprehensible what he was saying. He was talking so quickly, it was unwatchable almost. So I hope I'm not doing it to that extent. Hopefully it's appreciated the speed at which I'm talking. But if anyone needs a slowdown or whatnot, let me know for sure. I try to look at the comments every now and then. I just peeked over at them for the first time. And Ben asks price predictions today. So we'll look, but I will say I'm not a huge fan of price predictions, especially in the short term, because there really is no telling. It really is just a prediction, and maybe you can get it right some of the time, but it's really tough to say where a stock is going to move any given day because of this kind of stuff. I mean, this story, it just came out around 4, and then stocks started moving down. And you never know what's going to happen to move a stock price. Now, sure, you can look at a trend and say, maybe we'll just continue moving in that trend, and if we keep moving according to the trend, then we should end up at this price by a certain time. But it's very rare that actually happens, that you can actually do that to a real extent. A lot of people like to give price predictions, especially over the short term. I'm not a huge fan of it. I think that over the long term, you can do a decentish job, maybe predicting some prices, or at least saying, not that we'll end up here by a certain date, but by a certain date, maybe we'll hit a certain price, or I try to be pretty conservative with those estimates. Like with Sundial, if we were to speculate what might happen with its price, I would say, we could probably, if we see these legalization catalysts, which is an if, it's not a guarantee, I would say if we saw those, we could definitely see prices above $3 pretty easily, right? It would not take much legalization-wise to get Sundial pumping up above $3, and that's a pretty safe prediction. That's not even taking us up to the highs that we were at, and we'll see what happens. Nothing's a guarantee, but I could see us getting to above 3 real easily, and that's about a 6x from where we're at now, and we could potentially be much higher than 3. We could potentially be much higher than 3. We could get up to 5, but the price predictions, it's near impossible to say exactly where we'll end up. I would say that if this takes on a meme-driven rally during the legalization hype that we might be going through sometime soon, then potentially 420 could be a rallying point for investors. A lot of retail investors might try to pump it up to 420, which is what happened last time. They tried to pump it up to 420, and they were successful, even though the chart doesn't show it. The chart shows it at $3.96 as the high, but that's because 420 wasn't during the trading day. It was in after hours and pre-market. So Yeah, I could see 420 for Sundial as well, and we could certainly get a lot higher. I would say a safe price prediction would be at least $3, right? If we really see legalization hype, and that is a big increase, and especially if someone were to play the options. I mean, I will say I'm not the biggest fan of buying options, even if they're long out. I mean, they have to be priced correctly, and they have to be priced cheaply. Although, they are somewhat cheap on these almost a year out calls. Maybe the 24 calls would be better. Yeah. Wow. Yeah, you can get some options. I mean, you could be making some money on options. It's something that I might want to look at with Sundial, buying out the leaps, but maybe not. I've tried options before, and buying options long tends to be a risky endeavor because, like I said, you never know what's going to happen. You have no guarantee of being right, and the downside to it is you lose 100% of your money if you're wrong, as long as you hold the trade till the end. So options can definitely hurt accounts during periods where a stock might just move sideways for a year. That can kill options, and the upside, I will say, is enormous. You can definitely make a ton of money, say buying these $2 call options for Sundial in January of 2024, which is something that I may want to look into, just buying a couple of those, just because they could provide a real boost in value if we do end up seeing Sundial move up above 2. If we see it moving up to 3, that would already be just intrinsically, not even with any implied value. I think it's extrinsic value. That would still be like a 5x at least in money. So, granted, if we went up to 3, that would be a 5x if you just bought Sundial stock right now. So either way, you're making a lot of money if Sundial moves up, if you're in it. But Roblox got smoked. Roblox did get smoked. I heard about that. We'll pull up RBLX. I think that's the ticker symbol. Yeah, down 21%. I forget exactly what happened. I just remember seeing a little story. Their earnings, I guess. What happened during their earnings call, though? I am curious about Roblox. So they missed Q4 expectations, while increase in sales were lower than the consensus. Okay. So it looks like Roblox is really taking on metaverse following. A lot of people are betting that Roblox is going to be a big metaverse stock, and it's an interesting platform for that, for sure. It's an interesting platform. It's not my favorite. It seems a little kiddish. It doesn't seem like the kind of place where the biggest spenders might be. They did just miss sales expectations, but I know that, when times are good and kids want these virtual goods, I know some of my younger cousins have had their parents buy them a lot of stuff on Roblox. I know people can certainly spend a lot of money on Roblox, but overall, I think we can do a little bit better in the metaverse. I don't think Roblox is the end-all be-all of what we want in the metaverse. I think we could deal with stuff that's a little bit more futuristic, a little bit cooler than Roblox. I mean, don't get me wrong, if you're a fan of Roblox, or if you've never heard of it, I'll pull up some images of what it looks like. But, man, they actually have pretty cool images on Google, but this is not what it actually looks like in the game, I don't think. So, maybe they have changed it a bit. Look at this. Maybe they have changed it. I'll have to look into that. I've not played Roblox in a while, not since I was probably 8 years old. So it's been a long time for me having not played Roblox, but maybe it's gotten a little bit better. I could have sworn that just a couple of months ago I was with my very young cousin who was playing it, and it did not look all that cool. It didn't look great. It was interesting, but it wasn't that cool. So maybe Roblox isn't the best metaverse stock. If you are going to bet on a metaverse stock, there's a couple. Meta, obviously, which is it still trading as Facebook? Yeah. So they need to change that ticker symbol, and I think they're going to do that sometime soon. But if a company was going to do well regarding the metaverse, I know a lot of people aren't a big fan of Facebook, and most of that's because of their social media, the social media aspect of their company, right, and potential censorship issues. But I do think that they've got a shot at doing pretty well if the metaverse really takes off. And here's one reason why. Facebook makes the Oculus, and let's see, let's pull this up. Consoles sold by brand. Okay, so the year of, we'll pull this story up on Twitter. So 2021 was the year of VR, and I have one stat to show you why. This year, Oculus has sold more headsets than Microsoft did Xboxes. This marks the beginning of AR/VR's predominance. A thread on growth, use case, and future below, all right? But if you take a look at this chart, you can see that Oculus sold in 2021 8.1 million headsets. Now, I was actually one of those purchases. I actually bought an Oculus headset in 2021, the Oculus Quest 2. And you can see in 2021, Xbox sold 8 million consoles. Now, PlayStation sold a bunch more. Nintendo certainly sold a bunch more. I think this is actually compiling all of Nintendo's consoles, maybe, which includes the Switch and the Wii U and whatever else they sell. I'm not too big of a Nintendo player, but they beat out Xbox. So Oculus is on the rise, and it's a pretty impressive trajectory. Now, Facebook owns Oculus. They bought out Oculus, and they are the primary sellers of these headsets, the most popular VR headsets in the world. And if that's the future, you know, the predecessor of whatever VR headset we're really going to use, that's actually going to be really cool to enter the metaverse with, then we could certainly see Facebook making quite a bit of money. And not just on initial sales, because I'm almost certain that they're losing money on these headsets that they're selling, because they're selling them. I mean, look at this. I'm going to pull it up. They're selling them pretty darn cheap. $299. We're going to pull up their site right here. You could be buying these for $300, and they are pretty darn cool. Starting at $299, and it's a complete VR experience. You just have the headset, the two remotes, and that's all you need. You put this on. You could put it on in your room. You could put it on outside, wherever you want. You need no cameras, nothing looking at you, and it's a complete VR experience. I've used it before. It's pretty darn cool. In fact, the first time when I decided to buy it, I was just at a friend's house, and they pulled out the Oculus, and we played around in it for about 10 minutes, and I then bought one on Amazon before even leaving their house. So, big fan of these headsets. I will say that they're a bit too early on in development to be really super widely used, in my opinion, at least. I don't use them all that often now that I have it, right? I used it initially, and now it's kind of just a novelty. You know, if I want to mess around in VR for a couple of minutes, I'll use it. But in the future, I could definitely see, as the technology improves and that maybe as we get away from these remotes and get some hand tracking going on, there are some companies that have hand tracking technology. I could see us, or I could see Facebook slash Meta Platforms, as they're now supposed to be referred to, doing quite well, not just selling these headsets, but making money potentially on the back end if they can develop some applications for them, all kinds of stuff, maybe making a subscription service for them. They could do quite a bit with these headsets, and they are taking over the market. We'll pull up maybe a statistic on that. We'll try to find one. Look at the market share of VR headsets. This should be interesting. So, here we go. All right, Facebook leads the VR headset market in Q1 of 2021. I think, okay, so here we go. Oculus Quest 2, standalone headsets. All right. Where is this information? This might not, ideally we would have something with the chart. This isn't exactly the kind of chart that we want. Here, let me find this real quick. Okay, so this came out. All right, here we go. Oculus growing its market share to 35%. Yeah, the Quest 2 grows its VR headset market lead to 35%. And looking at all the others, that is the biggest one right here. You can see it's kind of tough to see. It's this black box right here. 35%. The next biggest leader is the Valve Index at 17%. So the Oculus is more than double, it looks like, or just about double the second largest headset by market share out there. So a lot of people use these Oculus headsets, and I think we could see some good stuff coming for Meta platforms in the future if they really pivot away from the social media. Keep it going, collect as much revenue as you can from it, sure, but really start trying to move into the metaverse, which I think is what Zuckerberg is planning on. We could see some good stuff. SoFi is running, says Quaid. SoFi. Is it? Yeah, it's up 3% on the day. I like SoFi. I've been buying into this one for the long term. And it's another one of those smaller market cap stocks that's been beaten down. One of these growth companies that just got beaten down from the highs it was at in November. It was almost double where it's at currently. And I think that a lot of these stocks have a big way to go on the return up. I think that they could not just get back to where they were, but we should probably see them at some point actually growing in price, right? You would expect to see these stocks growing in price, and we'll pull up SoFi on Yahoo Finance, which I believe it's a semi-small market cap. Obviously, they are a biggish company. They had an ad at the Super Bowl, or I think maybe it was even the Super Bowl is in the SoFi Stadium. But there you go, $10 billion market cap for SoFi. And when you look at other big fintech ventures, they can be a lot larger than that. Even more traditional banks that might not have costs as low as SoFi because they have to have all those physical retail locations. When you look at banks like Wells Fargo, Bank of America, a lot of banks have been closing over the past year. A lot of banks have been closing their physical retail locations because sometimes it doesn't make as much sense for them to have those locations open when people are mostly doing their banking online, which is what SoFi, they just got their banking charter. So I'm not sure if they've actually opened up their bank accounts yet, but yeah, it looks like they might have opened up their bank accounts. It says right here on their front page, break up with bad banking and earn up to $2,800. How can I do that? Let's see. When you move on with SoFi, you could get up to $2,800 with these offers. Okay. So maybe they haven't opened up their bank accounts yet, but they've got their banking charter, so they can actually open up a bank. And that is cool to see that SoFi is finally moving into banking. They've had investing and loans and refinancing, as well as debit cards, it looks like, and the crypto, of course. Of course, they're involved in crypto as well. So they are involved in quite a bit of stuff. And it seems like they're marketing themselves pretty well. A lot of people have heard of SoFi. It looks like they might be trying to target sports fans a little bit too heavily with that SoFi Stadium, but pretty much everyone watches the Super Bowl, so most people have probably heard of SoFi at some point by now. And overall, I think people will maybe be moving over to SoFi in the near future. I'll certainly be opening up a bank account with them whenever they end up offering that. I'm not sure when they will, but I'll definitely open up a SoFi account and hopefully get a good interest rate. Maybe they'll give it to me. I know, there are a lot of online banks, and we talk about some of them sometimes. Yoda Bank was a big one, and is a big one that I really enjoy using, that I think is returning a lot of value to the consumers of it. And if you want to open up a Yoda Bank account, feel free to use the link in description. You get 100 free lottery tickets on their app, and it's pretty cool stuff. If you haven't tried opening up a bank at Yoda, it's a good one. Basically, they pay you a much higher interest rate than what these traditional banks are paying you. Bank of America, Wells Fargo, all those places, they're not paying you very much to have a bank account with them. And I think that people will eventually maybe get a little bit more savvy. At least, I try to spread the word on it. I tell my friends about it. I'm telling you guys about it. It makes a lot of sense to me when there's essentially a free money opportunity, or a situation in which you're not getting very much money having your money sitting in one place. And if it's a guarantee, you move it over to this other place and you get a higher interest rate, it makes a lot of sense to do that, because that's something essentially for nothing, right? You're just moving your money from one place to another and you're getting a much higher interest rate. It makes a lot of sense to do that. Even if it doesn't seem like a large amount, those amounts can compound. And the beautiful part about Yoda, if you end up wanting to use that link that we've got in the description, well, you can actually do it right here. I'll show you guys how. Right here in the description of this stream, you can go down, get 100 lottery tickets with Yoda Bank by clicking that link, and then you download it on the mobile device. But when you use code RobAlmazy at signup, you get 100 free lottery tickets. So the way it works, I know we've talked about this in the past, you basically put money in like a normal bank account, and they give you lottery tickets, which end up paying out smallish prizes most weeks, which accumulate as it ends up being a greater amount than what you would traditionally be getting with just a normal interest payment at a bank account. And you have the potential every week of winning a big prize. You know, you could win up to $10 million. Or the second biggest prize, I think, is a Tesla. So there are some pretty good prizes out there if you're interested. We'll see what SoFi can do, though, maybe to compete with that. We'll see if SoFi can do something that's interesting, if they can do something out there, which I think Yoda has done a great job of publicizing that and of getting a unique following of people who are interested in more of a lottery aspect. Now, we will pull up real quick what's going on with the market, and it's the exact opposite of what was going on with the market yesterday. Most stocks are a little red, and energy stocks are actually the ones that are green today. Now, this is because of the Russia-Ukraine situation. You know, when you see a map of the market that looks like this, you can pretty much tell it's because of the Russia-Ukraine situation. People are worried that stocks aren't going to be doing too good because of all this conflict between Russia and Ukraine because of a potential war, and there's more volatility and more fear, so people are selling their stocks. Okay. However, energy and gas are moving up because Russia and Ukraine provide a lot of that, and people are worried that there won't be as much accessibility to it. If there is some kind of war, maybe the military will be using a lot, but certainly Russia and Ukraine won't be exporting any to us. So we'll see what goes on over the next couple of days. You know, I think people are getting a little bit fed up with this whole situation going on at the border of Ukraine. I think people are starting to realize that, you know, this kind of thing happens every couple of years, and it's strange. I really can't wrap my head around why Putin's doing it. I mean, I don't know what Putin's getting out of having these troops there. Maybe the United States is doing something to bother him that I'm not aware of. You know, I understand that Russia and the U.S. don't typically get along to the best extent. They're not best friends by any means, but it's just a little annoying, and it's certainly not the best thing for his stock market either, because the story was that Russian stocks were actually up around 5% yesterday when we heard that Russia was moving troops away from the border. A lot of money flowed back into Russian stocks because people had been selling them, and selling them pretty heavily. And let me pull up and see if I can find the ruble, or the ruble, whatever it is. The ruble. All right. So look at this. Look at this. Right now, the Russian ruble, according to the Big Mac index, for those of you who've never looked at this, well, we'll maybe make a whole video on this, but the ruble is not trending very well, right? The ruble is very undervalued at the moment because of this whole situation. It's actually at the bottom of this list of the Big Mac index. Currently, the U.S. dollar is number 3 on the list, and the Swiss franc and Norwegian krone are the only two that are beating out the dollar at the moment. Right under it is the Swedish krona, and at the bottom we've got the Russian ruble on basically the value against the U.S. dollar, essentially, in terms of how many Big Macs you could buy if you traded the currencies. We'll make a video on this. It's an interesting index, the Big Mac index, which gives you a bit more of an understanding of not necessarily the price that currencies have against each other, but more so the purchasing power that currencies have in their respective countries. So it's a pretty cool thing. We might have to make a whole video on that because it's pretty interesting. I do look at it from time to time. But at the moment, BBIG, one of the stocks that we've been watching on this channel for the past while, you saw that they spiked up this morning. Now, this was on news that they acquired AdRiser, an AI-powered revenue attribution and audience acquisition ad platform. So they pumped up on the news. Now they're moving down a little bit, unfortunately. But I don't think that we're going to see a massive, massive move in BBIG until we really get the record date for that tied dividend. I think that's what has real potential to drive up interest, because you can see the last time that we were about to get this tied dividend, well, sure, there was some hype around here. This was more so short squeeze hype. But when we were actually about to get the record date for the dividend, BBIG moved up from $5 to $8. And then when that was delayed, we ended up crashing down over the next couple of days and weeks as low as $2.15 just about. And now we're sitting at $3.60. So we're going to see where BBIG can go. This advisor news was enough to pump us up a little bit to keep us green on the day. We're up 1.7%, but all in all, we have been falling over the past little bit. Not the best situation. AMC, it looks like they did have a good day in the pre-market. They hit up $20. So now we're fighting with that $20 resistance level. Hopefully, we're going to be able to blast through it. But who knows? Sundial not having the best day, right? Really struggling with this 61-cent level. Going to fight to stay above it, it looks like. But at the moment, we're being pushed below. So hopefully, Sundial is going to be able to make a little bit of a rebound, move up above 61 cents, and continue staying there. You know, no stocks are doing incredibly well. There's nothing doing incredibly well today. The markets overall are down. The SPY is down. And a lot of it, I think, has to do with this Russia situation. You know, people thought that this was over. And the U.S. Senate says they are prepared to support the immediate imposition of strong sanctions on Russia if Putin further escalates with Ukraine. Wow. So Russia might be getting some strong sanctions from the U.S. And Abstract has arrived. And so we will look at cryptos now, which we touched on them earlier. They're basically, cryptos are moving down today. They're moving down, and it's because of this Russia-Ukraine situation. NATO says Russia is increasing troop numbers on the Ukrainian border, despite yesterday they said that they were moving troops out, that they were returning to their permanent deployments after completing their military exercises. They released a little video of it. But cryptos are notably down alongside stocks because of that. Bitcoin down 1.4%, Ethereum down 1.4%, BNB down 1.4%, Dogecoin down 1.8%, Shiba Inu down 2.8%. A lot of these coins are down pretty similar to what we're seeing in the stock market. You know, it's nothing new. The only coin that's up is Avalanche. So Avalanche is up 5% on the day, despite this additional fear being placed in the markets. And, you know, it is justifiable. If some people want to sell their stuff and sell their stocks and sell their cryptos because they're worried about Russia and Ukraine, fine. I can wrap my head around it. At least it makes more sense than people selling because they're worried about the Fed raising interest rates 1%. That is not something that I'm worried about. The Fed raising rates by 1 or even 2 or 3% would not be a massive hit to the stock market, or it shouldn't be, in terms of people wanting to move into cash, because inflation, and I know I sound like a broken record here, but inflation is higher than that right now. So why would you want to hold cash if inflation is so great? I think that we've gotten to a point where we've printed so much money, we've thrown out so much money into circulation to not just everyday people like you and I, but a lot of that money that we threw out into circulation went to wealthier individuals. A lot of people were pretty well off who got that money, and they got more money, and then they had quite a bit to play with. And what they did with it was they bought up stocks over the past 2 years. They sure bought up a lot of stocks. And now that money, it's not like they bought those stocks and that money disappeared. They bought those stocks and handed that money over to people who already owned those stocks. So they were other wealthy people, most likely. And those people now have extra cash. And what are they going to do? Well, they're going to buy up their favorite assets. So maybe some of it flows into crypto as well. And what people don't seem to understand, at least the people selling big, is that, that money never disappears. That money's there permanently. And the value of these assets is permanently raised in terms of cash, because there's a lot more cash in the system. A lot more cash can be used to buy things like Bitcoin and Ethereum. And so the value of those assets in terms of cash has been raised quite a bit because we have so much more cash in the system. That money isn't disappearing anytime soon. In fact, we're still making more money. So it's no surprise, to see that inflation is moving up. not as much as asset valuations have moved up because most of the money went to the rich and they decided to use it to buy stocks, not, food. And, some people who got money decided to use it to buy some used cars. So used cars were up quite a bit. Some of the people used it and decided to start using some more energy. So we've seen some higher energy costs. A lot of the energy costs are potentially, wealthier individuals using energy for industrial purposes. Maybe they're using it. Maybe they're Elon Musk launching rocket ships into space and they need to generate all of those parts and fuel and mine for those materials and whatnot. So, potentially that's a reason why we're seeing higher energy costs as well as higher costs for other things. But it makes, a lot of sense when you think about who got this money, where did it go, what's rising in price, and what's likely to follow after this. It's not as if that money's gone. They've just been trading it back and forth between friends, these wealthy individuals, and it's not disappearing anytime soon. Sure, some of it gets taxed away, and the government gets it and hands it back out to other people and buys stuff from other countries and uses it on social programs and to build roads and stuff. I have noticed a lot more construction going on in my area, at least. And I don't know if you guys have noticed the same, but I will say that whenever we start to see real fears of a recession or anything like that, which is what people have been talking about, this is, not factual at all. It's just something that I've observed in my life, is I've tended to notice a lot more road work going on, a lot more construction. And potentially that's because the government is trying to stimulate the economy by buying up products and services used to generate stuff that they have control over, right? Roads. So the government might be buying up a lot of, materials, whatever it is you use to make roads nowadays, tar, asphalt, whatever it is. And then they're paying these construction workers, and those construction workers now have more money. The people owning those businesses now have more money that they can go and spend on other products. The construction workers have more money they can use to go and get lunch or do whatever. And it does help out to stimulate the economy. And it's kind of an unseen force that the government has, this ability to just start doing more construction and work on the infrastructure, which we did get that infrastructure bill passed. But we have not yet passed that Build Back Better bill, the social infrastructure bill. That one is tough. Manchin said no to that. He did not like the sound of that Build Back Better bill. And that would have been a pretty significant spender. It also would have been probably much higher taxes on some people. And Strimbulan says, what state are you from? Trying to figure out that accent, Midwest or Northeast. It's North Carolina. So North Carolina, I wasn't aware I had an accent, but I suppose maybe some people hear it that way. Yeah, maybe. I guess I hear accents from people in other areas, and I'm sure that, I come across as having an accent to some people. Hopefully it's not too obtrusive. Hopefully it doesn't sound too much like an accent, but I do... I anticipate that there is some kind of accent going on. But we are just about at the end of this thing, guys. The market map will show it one last time. It's not looking good for Facebook. We're down about 3.5%. And some of these larger market cap stocks are suffering. So overall, it looks like we're starting to see smaller market cap stocks, and not the smallest. They're definitely not the smallest market caps out there. Exxon isn't that small, but some of the smaller market cap stocks compared to the big boys start to do a little bit better, which is overall encouraging to see, even on a red day. Even though the markets are down a bit, we're still looking at a situation where these small market cap stocks are coming back, which I'm excited about. So that is what we've got for the day, guys. And it wasn't the greenest day. Maybe we can turn things around. Hopefully, Russia is really going to pull back troops in a big way, and we're going to have proof of that, and the markets can then proceed to move up. That would be the hope, but you never know what's going to go on. So stay safe out there, guys. Have a good one. We'll see you tomorrow at 9. Is tomorrow Friday? No, tomorrow's Thursday. So we'll see you tomorrow at 9, and that'll be bringing us close to the end of the week and hopefully the end to some of this volatility and redness that we've been seeing. So other than that, guys, have a great day. See you in the next one. Bye.